afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Went Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a strong day of trade for the markets. The Nifty trades near the 10,900 mark. The Nifty Pharma Index is the top sectoral gainer, up for the sixth straight day in a row. The International Energy Agency says that oil production from Iran and Venezuela may fall by as much as 30% owing to economic headwinds and also US sanctions. Dr. Reddy's is the top gainer on the Nifty after Nomura says that the launch of a key drug will be a key catalyst for future upside. And Tata Steel is among the top Nifty losers in trade today after ThyssenKrupp is set to seek better terms for its proposed JV in Europe.
Well, Navneet, we've seen good gains coming in as far as the index is concerned. The Nifty edging higher, in fact, nudging the 10,900 mark, and where we've seen a lot of, well, resistance build in. That said, it's currently trading near day's high, so it's turning out to be a good session for the Nifty 50 index, up as much as 0.4%. Let's take a look at some of the key movers as well in today's day of trade in terms of the heat map. And as you can see, it's going to be largely the pharma stocks right at the top. So Dr. Reddy, Cipla and TCS along with Infosys is now also taking over with substantial gains coming in. Sun Pharma up as much as 2%. And we've seen good gains coming in Axis Bank, SBI as well as Titan Company. On the losing end, there isn't too much to speak for except for Tata Steel. It's just down by as much as 2.3%. Indiabulls Housing Finance, Adani Ports and Z Entertainment, well, largely there, but at least in today's day of trade, the momentum is with the gainers, largely on the back of the pharma pack. Now, in terms of contributors, of course, it's heavyweights like TCS and Infosys is the reason why we're seeing that big up move in the index, followed by ICICI as well as SBI. HDFC Twins, on the other hand, bearing down on the index. So this is, well, divergent moves coming in here, and of course Tata Steel also coming through on the decline. But when it comes to the advance decline ratio, as you can see, it's moved largely parallel when it comes to the advances to declines, and that's in the ratio of as much as 4:3 for now in favor of advances. And even when it comes to its turnovers, well, not too much to speak for, largely average when it comes to the NSE cash at around little over 21,000 crores and NSE F&O turnovers too at just about 4.5 lakh crores. So that's largely average. And on the whole, we're going to see whether or not we do see the Nifty eventually close above the mark of 10,900 and where that takes the turnovers. But for now, it's largely average.
Well, Agam, clearly we'll be watching out for the 10,900 mark, and Nifty is inching very closer to that, just 16 points away. Remember, last time when we saw that mark was, I guess, on May 15th when the Karnataka election results had come out. So watch out for that level. But for the day, let's just pull up the futures. Nifty futures, the discount there has widened a lot, 23 points. Open interest is up 5%, but it is the Bank Nifty where a lot of OI build-up so far has been seen. So 12.5% higher, and even the Bank Nifty June futures, they are trading at a discount. So that's not a very, very comforting sign, futures trading at a discount. If you look at the India Volatility Index, can we just pull up the India VIX in the morning? We'd seen some correction coming by. So it's still trading with cuts of 2%. Now remember why the markets are doing well. Some comforting signs also coming from declining volatility in the last few sessions, and also on account of higher put writing, we've seen the PCR also going up. That brings us to the active option strikes then. The 10,800 put in today's session has seen aggressive put writing. Almost 11 lakh shares have been added for that strike. The 10,600 and the 700 strikes too have seen some bit of OI addition. So higher level strikes seeing put writing tells you the base for this market is actually shifting higher now. On the call side, some unwinding has come in fact, for 10,800 call. Almost 3.2 lakh shares so far has been added for the 10,900 strike. Remember, the range remains on the upside. That is 11,000 for the June series. Let me take you through a couple of stock futures that are active today. Then Dish TV, after a 2.2% equity change hands in multiple block deals, there was a lot of activity seen in this stock. If you look at the futures of this one, obviously it's gained on high volumes because of multiple block deals. 32% higher open interest That tells you fresh long positions have been seen. If possible, can we bring up the intraday chart of Dish TV? I think it's fallen from the day's high that we've seen. It's currently trading only with gains of 1%. It did go up significantly after the block deal, but right now it's come off the day's high. The other one is Page Industries, and this counter has touched its all-time high levels in today's trading session. And the news behind that was that their license pact with Jockey has been extended till 2040. On back of that, some fresh long positions have been taken. It's trading with gains of 5%. Remember, the volumes for this one too are on the higher side on the cash segment. Do watch out for the delivery data. And lastly, I just want to highlight RBL Bank, a stock which has touched fresh 52-week high in today's session. Once again, the volumes have been on the higher side. And remember, this is one stock where buy calls have been coming in from both technical as well as a couple of fundamental analysts. So 19% higher in terms of open interest increase for June futures, telling you some fresh long build-up seen for RBL Bank.
Well, Navneet, you can't really not mention the pharmaceutical space right now, and because it's Wednesday, it's that time of the week when we discuss a stock and go through the complete check on a fundamental basis. But today it's not going to be just about one stock, it's going to be about the entire sector, where we're going to take stock of what's going on with the pharmaceutical sector, which has been extremely resilient over the last few days, and well, more importantly, one of its prime players, Sun Pharma, which is also on the up and about. Let's discuss this with well, the entire sector with an analyst here. We have Amey Chalke of HDFC Securities. Amey, thanks for joining us. And we also have a very own Darshan Mehta, who's well probably going to take us through this conversation. So Darshan, without any ado, without any delay, I'm going to take it.
Yes, Amey, thanks for joining us on the show. Firstly, now that the news is out for Sun Pharma, the basic question is there more potential upside for Sun Pharma, or is the Halol resolution pretty much priced in now?
So Halol resolution is obviously priced in. However, there could be few surprise launches which could happen from the Halol, which market is not aware of. So this Halol facility can manufacture liposomal injectable products basically. So these are typically para 3 opportunities where market won't be aware of if they launch these products. So such kind of opportunities would be a key trigger going ahead basically.
We've seen that the index on an edge and stock specific, they've rallied anywhere between 15 to 20% really, but if you see from their lifetime high, they're still 50% below. Do you think that this rally is short-lived among the pharma stocks, or do they have the potential to go back to their lifetime highs?
So I would be a little cautious, like first 2 quarters may be a little softer in FY19. However, the launch momentum will build up going into FY19, second half of FY19 basically. So you would see the good returns coming in maybe at the end of FY19 rather than this rally will continue from here basically.
So you released this new report today on the pharma sector. What's the key highlight of that report? What are you trying to put forward?
So basically, we have analyzed a trend over last 3 years. So what had changed from FY15 when the Nifty Pharma Index was at around 13,000 level, and now it has come down to 8,000 level. So basically, most of these companies have gone through regulatory challenges, price erosion, lot of competition in their US business. So that has eroded their profits substantially over last 3 years. However, what has changed is now these guys have invested more on the manufacturing side. So now they have more manufacturing units. So obviously they have diversified their regulatory risk over there. Then the price erosion is obviously moderating in the US business. Then obviously the R&D spend is also topping out at 8 to 9% level. Plus, there are many lucrative specialty launches which will come in the FY19 onwards. So that will help them to deliver at least 20% kind of earnings CAGR going ahead.
So let's talk stock specific. Which are the stocks that you believe, as per your report, will be what investors should buy that probably will outperform, and which are your avoids now?
So at this point of time, even after there has been rally for like 10 odd percent, I believe Lupin, Aurobindo and Glenmark are still cheap in terms of valuation. Sun Pharma's valuations are may not be attractive at this point of time, but we need to understand that they are investing into the specialty side of the business, so that their returns would be back-ended. And since these opportunities are huge, I believe these opportunities will also get factored in very soon.
Okay, Aurobindo, I agree, the valuations are much cheap, but I can't say the same thing about Lupin or Glenmark. They're pretty much at that level in the range of anywhere between 20 to 25%. So are you comparing it to the historical average, or are you comparing it to its peers now?
So if you see on FY18 earnings, obviously Lupin is trading at around 22 times. So going ahead, we are seeing earning growth. So obviously that valuation will go down substantially if we see FY20 earnings basically. They have inhaler launches lined up for FY19. They have biosimilar launch in FY20 for Europe and Japanese market as well. So obviously once these numbers will factored in the market estimates, obviously you will find these estimates to be
okay. I don't know whether you track it or no, but if you see the current trend, I think the MNC pharma companies have actually outperformed. They're doing well. Obviously, they came off a lower base and post demonetization GST. Any word on the MNC pharma companies as of such?
So we are tracking that sector very closely. What we need to be aware of that new pharma policy will be rolled out very soon. So that could be a major overhang over these MNC companies going ahead. Since they have run up significantly, I think one should wait and see how that policy would be going ahead, and then one can bet on it.
Okay, and before we end the interview, just a few things. What are the key triggers for individual stocks among the large cap that you're looking at? For Halol, for Sun Pharma, the big trigger was Halol that has played out. Among the other large caps like a Dr. Reddy, what are you looking at? Are you looking at the potential Suboxone launch that could come in? Would they do an at-risk launch?
So that could be a possibility. So Suboxone launch is a possibility in the near term for Dr. Reddy. Similarly, Tapenem is also a possible launch for Aurobindo, which is also a significant product for them.
Okay.
Similarly, for Cadila, Asacol HD is another big opportunity. So each and every player has their key specific products basically for FY19.
Okay, and what about Cipla? Do you like Cipla? And what about the domestic focused companies which have a wider presence in the domestic market, like a Cipla or an Alchem, or probably even a little bit of Cadila also? How would you play them? Do you think it makes sense to invest in companies which have a sizable domestic presence, or now is the time to invest in companies which have a heavy US presence because they have been beaten down?
So yeah, there could be two strategies. You could diversify your portfolio with one US company, one US focused company, one domestic focused company, and one CRAMS business. So in that order, I will prefer in US Lupin, then in India market Alchem, and Dishman for CRAMS company.
Yeah, you are quite bullish on Dishman. Your report has come out, but somehow it hasn't played out the way it's supposed to. What's gone wrong for Dishman, and do you maintain the same strategy for Dishman? What you've
So we need to understand that Dishman is working with the innovators. So the life cycle of those products is 5 to 10 years basically. So company is likely to launch or the partners are likely to launch at least 10 products by the end of FY20. So there would be 10 commercial launches for Dishman over next 2 years. So that is a huge opportunity for them. And obviously these returns would be back-ended, and these are long-term returns if you want to invest in company like Dishman.
Okay, and my final question, Amay, before we end, which stocks according to you, as per your report, have the highest return potentials currently?
So in terms of return potential, in large cap, I guess it is Lupin.
What's the target price in Lupin?
Is around 1200.
1200. And among the mid caps, which are the stocks that you like?
So in mid caps, we like Alchem. However, obviously the return potential would be a little moderated because it is a domestic focused company, and these are typically stable returns which you generate from the domestic.
Does it run the risk of their plant being under the US FDA scanner? The observations were not at all light. They were pretty serious for the Daman plant. Is that a potential risk for Alchem?
That could be an overhang, but we need to see that FY18 earnings are largely contributed by the domestic business.
Okay.
Almost 100% is coming from the domestic side.
Okay.
And US business was supposed to deliver in terms of operating leverage, basically.
Okay.
So in that sense, even if you assume 70 rupees EPS, I don't think so stock should go down below 1900 level, basically.
Okay, so that's the view. Agam and Navneet, you all have any questions for Amay?
I think you covered most of the questions, and I think there was a fairly comprehensive chat. So I'm going to thank Darshan, of course, you and Amay, especially you, for taking us through your views on the pharmaceutical sector, which is clearly up and about in today's day of trade, and perhaps the key leader in today's day of trade as well when it comes to the benchmark indices. But moving on from the pharma space to the consumer durable space. Now, we all know that it's not been such a great month, or rather should I say the great summer season for air conditioners and refrigerator sales, despite the fact that we've seen a very sharp spike in temperatures. And a lot of these consumer durable companies have been talking about inventory buildup. We're in conversation with one more management for the same, and we're catching up with Sunil D'Souza, the managing director at Whirlpool, to talk to him about how sales have been and what the lack of sales can have, what impact the lack of sales can have on FY19 going forward. So Sunil, good afternoon and thanks for joining us. A lot of your peers have already spoken about, a lackluster summer coming through. What kind of traction are you seeing in your company, and what does that mean for perhaps earnings for Q1 moving in, and what does it mean for FY19 as well?
Yeah, so before I talk about the sales specifically for this summer, just want to say that we've had great momentum for Whirlpool of India. In the last 3 fiscal years, we've grown 5%, 14% and 24% a year. Even the last quarter, we came in at 1,257 crores top line and a profit after tax of 91. And for the full fiscal year, we came in close to 5,000 crores and a PAT of 351. So I would dare say that we're coming with momentum behind us. That said, we do see good economic indicators. The macros have been holding out. It's been a smooth operating environment. But yes, this year, summer has played a bit truant. That said, we've always maintained that we will continue to grow double digit and we will continue to grow ahead of industry. I think we are well on track for that. Summer and the entire volatility of commodity currency, the Whirlpool of India team is a very battle-hardened team, I may call it, and we're used to tackling this volatility over the years. The team has been through ups and downs. We've got a very strong portfolio. We've actually ramped up our execution quite a bit. Both portfolio and geographic expansion plans are on track. Shop floor execution is probably at the best level it's been in years. So we feel quite confident of where we are and our momentum as we move ahead.
Right, Sunil. Research suggests that a lot of decisions when it comes to consumer durables are made on the shop floor itself. And based on that, what are your plans here in terms of increasing personnel on the shop floor to influence some of these customers when they go ahead and looking for buying some of these consumer durables?
Okay, so in this business, the standard analogy is the consumer does a lot of research with friends, family, online, reading about things because it is a high-ticket purchase item. After that, historically, we used to say that the consumer would walk into 3 shop floors before making a decision. And anyway, even after that, 75% of the decisions were made on the last shop floor. Yes, the information flows have changed from friends and family to more online, from just reading to more of blogs and consumer research reports which are available online, etc. But even then, I would dare say that 75% of the decisions are still made on the shop floor. Because there is a variety of brands out there with a variety of offerings, different features, benefits, value propositions, technologies, the consumer is grappling with all these details. And therefore, the final decision is made when they actually look at the product, evaluate it in their mind, and then make the purchase decision. And therefore, as I mentioned, both geographic expansion in terms of being at the outlet when the consumer makes the decision, and the second is making sure that the execution in the outlet is right up there, because ultimately the product is evaluated by the consumer and the consumer makes the decisions. So we've ramped up, we've used digitization a lot to educate our sales force who is on the shop floor. We've ramped up our online web pages, etc., as consumer make decisions, even at the point of purchase on the shop floor. We have significantly ramped up our execution on the shop floors in some terms of planograms, etc. The POS, the product stories that are available there, and the kind of information that is available there, that has been stepped up 1 or 2 notches. So all in all, we feel pretty confident that if a consumer walks in and stands in front of a set of refrigerators, which includes Whirlpool, we do feel quite confident that the consumer will definitely have Whirlpool right up at the top of their mind as they're making the decision.
And can you also tell us a little more about the plans of separating your mass premium segment?
When I talk about the product portfolio, I would split it into 2 different parts. A is categories. If you look at categories, we are very strong in refrigerators and washers, and we are trying to expand into adjacent categories, as I call it, about cooking, water, air, etc. In the products itself, and when I come specifically to refrigerators and washers, I would segment the whole market into 3 distinct spaces: mass, which is the lower end, mass premium, and premium. Historically, Whirlpool has been a very strong player in the mass premium segment, which is where the significant part of the market lies. So in the mass premium segment, we are making sure we are strengthening our portfolio. We are adding features and benefits which makes the product much more appealing. So we are already strong there, and we are strengthening it by adding features, benefits, technology, etc. The 2 places where we see scope for expansion is the mass, which gives us scale, and premium, which gives us both image and profitability, that's per unit. So we are expanding both ends of the spectrum, and that is very, very visible in the product mix that we have moving ahead. So A, in terms of the segments itself, expanding the spaces, and B, in terms of categories, moving into adjacencies and expanding those categories. That is where I think we will derive maximum leverage from the brand, network, team, manufacturing spaces that we have.
And Sunil, we're also reading about commodity costs inching up higher. What does it mean for your raw materials costs, hence gross margins? And what about your operating margins outlook over the next couple of years?
First, let me talk about the input costs that you mentioned. After, I would say, a decent amount of sort of flattish numbers that we saw both on commodity and currency, we've seen an uptick both on commodities and a depreciation of the rupee, both of which impact our business quite significantly. It impacts us, it impacts all the players in the industry because quite a lot of the components that the industry uses are imported, and therefore the rupee depreciation makes an impact. Quite a lot of the raw material that we use is oil dependent or a derivative of oil dependent, like energy costs, etc., for steel, and therefore the pressures will mount. So we do see headwinds on both commodities and currencies which have escalated, and therefore we need to tackle it going ahead. It's a fine balance of making sure we balance commodity, currency, make sure that the pricing is right, make sure that the features, benefits are right. All in all, the Indian consumer is a value buyer, and we've got to make sure that the Whirlpool portfolio appeals to the consumer in terms of value. That said, it's a constant jugglery between margins, volume, momentum, etc. I would just like to say that Whirlpool, we are immensely focused on maintaining margins or growing margins. We are not in the volume game for volume's sake. It has to be a profitable business, and we will continue to drive volumes at a double-digit growth, which we are confident of given our portfolio and the efficiencies that we have on the table.
Okay, Sunil, we'll leave it at that. Thanks for joining us and giving us an outlook on Whirlpool along with the rest of the consumer durables industry. But with that, we'll move on. Aditya Birla Sun Life Mutual Fund has increased its stake in companies like PTC India and Hindalco. And while it did exit other companies like Reliance Naval and Just Dial, here's Jayesh Khilnani telling us a little more about the changes in the portfolio and of the month of May. Jayesh, over to you.
So Agam, first and foremost, Aditya Birla Sun Life Mutual Fund, they have equity assets worth over 81,000 rupees, which is split between the sectors in terms of highest exposure they have in the financial space, over 30% exposure over there, followed by consumer discretionary, which they have about 13.5%. But let's have a look at their key portfolio changes for the month of May, where they have increased stake is, like you were mentioning, PTC India, that they have added about 86 lakh shares, followed by Hindalco from the metal space. In the morning we saw HDFC Mutual Fund, they have bought Hindustan Zinc. Hindalco, they have added about 43 lakh shares. Tech Mahindra from the IT space, about 39 lakh shares added over there as well, followed by CG Consumer and Petronet LNG as well. In terms of where they have actually reduced stake, we have ICICI Bank. Now this also is a repeat from the HDFC Mutual Fund portfolio changes that we saw. So Aditya Birla has in fact sold 88 lakh shares of ICICI Bank, followed by Power Grid, 69 lakh shares reduced over there. IOC, IDFC and Indraprasth Gas also more than 50 lakh shares they have reduced exposure. But let's have a look at where they have bought in up fresh and where they have sold off completely. They have not done much buying except for Indostar Capital subscribed to the IPO. They got about 7.2 lakh shares. Aside of that, only PC Jeweler, that's the interesting one, 1.4 lakh shares they have purchased. But when it comes to selling, plenty of selling seen from Aditya Birla Sun Life Mutual Fund. Reliance Naval goes out of the portfolio, 7.65 lakh shares that they had. All of it goes out of the portfolio. Torrent Power also 1.6 lakh shares they have sold off. Narayana Rudale about more than 1 lakh shares that they sold off, followed by Just Dial and Unichem Labs. All of these stocks go out of the portfolio of Aditya Birla Sun Life Mutual Fund.
Okay, Jayesh, thanks a lot for bringing all those details with the recheck in Aditya Birla's portfolio. But moving on, just looking at the markets again, remember we are trading very close to the 10,900 mark. So Nifty did cross the levels of 92, 93, but we're still hovering around that mark, sitting with gains of almost 46 points. Before I get my next guest, I just want to highlight a few stocks which are doing well in today's trading session. Pull up Muthoot Capital, that's gone up in trade, and that's sitting with gains of nearly 14 to 15%, almost 15% at day's high, so watch out for this one. You also got a couple of other stocks which have risen. For example, among the F&O securities, you've got Kaveri Seeds. That's seen a sudden jump, and there's been some long positions also which we've seen. If you can just pull up the futures, last when I checked, the open interest was up nearly 16 to 17% for this one, indicating there are some fresh long positions being taken for Kaveri Seed. Okay, it's 19% higher, but remember the June futures are trading at a discount of almost 1 point. So good going. Bank Nifty also trading above the mark of 26,700. Let's bring in Natasha Shankar, Senior Vice President and Head of Research at Yes Securities, who joins us right here in the studio. Hi Natasha, thanks a lot for coming by. I want to start this conversation with TCS. They're going to be mulling buyback once again, day after tomorrow. Are you surprised by the news?
Positively surprised. Yeah, pleasantly surprised by it, because we didn't really expect a buyback so soon on the cards. Given that they just finished the previous one and they just came out with a bonus issue as well. So we were not really expecting it, but it's a good monetization of the reserves that they already have.
Do you guys have coverage on TCS?
Absolutely, we do.
What's the target and what's the rating?
So I think we're still maintaining an accumulate view on it, no longer a buy rating, because it has run up quite significantly. So it's an accumulate on dips, and we see a further, I mean, from current prices, we only see an upside of about 13 to 14%. But if accumulated on dips, then we could see returns in excess of 15%.
Can buyback be a precursor to any sort of re-rating? I was just reading one of the reports which suggested they've maintained their policy of distributing 100% of free cash flow, which can actually be a re-rating.
Absolutely, absolutely, and which is why in the first place we do have a premium multiple which we have assigned to TCS, because of the fact that they have shown repeatedly that they have been able to transfer that cash across to the minority shareholders. But would we re-rate it right now? Not really. We would still like to maintain it at a
And risk reward is better for Infosys compared to TCS?
Absolutely. Infosys hasn't run up as much.
All right, so Natasha, as a follow-up, well, there has been a slow and steady rise for these large cap companies, but a much sharper appreciation for some of the relatively smaller ones. Where do you think value lies right now when you compare the large caps against the mid caps right now?
So within the IT pack? All right, so we still positive on Persistent. It has started, the stock has finally started moving up now, but we've been positive on it for a while. Right. The second one is Mindtree. The third one is Cyient, and of course Ensar. So these are the stocks that we've been positive on. We see a lot of momentum happening from the investments made towards digital, particularly for Persistent. Right. And in addition to that, the movement of the rupee vis-a-vis the dollar, as well as a better pipeline as compared to what it was last year. We think that these 4 companies could outperform in the near term.
Okay, that's the fundamental view coming in on the IT pack. Remember, there's a lot of support that you're seeing for Nifty today, which is coming from your heavyweights like TCS as well as Infosys. Let's get some technical view going then. Amar Singh, Head of Advisory at Angel Broking, joins us on the show now. Hi Amar, good afternoon and thanks a lot for joining us. We're inching very closer to the mark of 10,900. What's the call on Nifty and Bank Nifty at these levels? Do you see more upside, or before that there could be a little bit of consolidation?
Yeah, very good afternoon. Definitely, yes, we are seeing a positive movement both in Nifty and Bank Nifty. And looking at Nifty first, what we see is that the high that was made on 15th of May last month in Nifty towards 10,929. So Nifty is very, it's closely inching towards that level, 10,900 mark. So yes, that should act as an immediate level of resistance. So 10,900 to 10,950, that should be a range of resistance on the upside. But the way Nifty has been finding strong support at lower levels, and also the way Bank Nifty is consistently trading above, if you look at it, 26,700 odd levels or so. So clearly reflecting that the overall trend remains positive. So any pullback is being used as a buying opportunity. And also if you look at Nifty per se, Nifty did form a base, and from there it moved up sharply from almost 10,420 odd levels or so. Nifty has rallied to almost 10,900, so that's been a very sharp rally. And also if you look at the broad base major stocks, be the IT stocks, the pharma stocks, and also Reliance to a certain extent, some of the private sector banks, clearly reflects that there is buying interest happening across sectors, so that also should hold good. And technically looking at the long-term charts, Nifty continues to remain positive. However, we'll have to watch out how it trades consistently, or whether it consistently trades above 10,900 and 10,950, because that would be a technical level to watch out for. If that is taken out decisively and Nifty consistently trades above 10,950 odd levels, then it's headed higher.
Fair enough, Amar. You know, one of the top gainers on the Nifty today is Infosys as well. And you also have that as one of your top picks. What's going on here? How are you reading the technicals?
Yeah, looking at Infosys, what we are seeing is that Infosys has breached a major technical level. If you look at Infosys, almost in June 2016, 2 years back, it had made a high of 1279, and that high wasn't taken out. But today that high has been taken out also, and technically if you look at the charts for Infosys on the long term as well as the short term charts, it's very strong technically on the charts. So any pullback should be used as a buying opportunity. So the level to look at buying Infosys is around 1265, 1270. That could be a good level to buy, with a stop loss of 1236 on the downside and 1329 on the upside. That should be an opportunity in Infosys.
Amar, any other stock where you have any sort of buy or sell idea for the day?
Yeah, the other one to look at is Dabur. What we're seeing in Dabur is that since the last week of March, it has moved up by almost 25 to 30% from 300 odd levels or so. It's currently trading around 390 odd levels. So, and technically it's strong on the charts. If you look at the long term as well as the short term charts, the trend remains up and strong. That's a key point here. So any pullback in Dabur towards 385 can be used as a buying opportunity, with a stop loss below 380 and a target of 401 in the short term.
Okay, well, let's also get in Hadrian Mendonca, Senior Technical Analyst at IIFL, who's joining us on the show. Hadrian, good afternoon. Tell us, how are you reading the underlying technicals right now with respect to the benchmark indices?
Yeah, without a doubt, Nifty has broken out from the symmetrical triangle pattern, which I've been speaking about in the past week as well. So finally, we've seen that breakout that we were expecting, but then there is something very important we should note and we should not ignore, that the breakout is actually coming. If the Nifty closes around the same level as we are seeing right now, then Nifty is actually breaking out by forming a hanging man pattern, or if I may say a dragonfly doji pattern, candlestick pattern. And both these patterns indicate and give early signs of reversal. So I'm really concerned here that this might, I really want to believe that the breakout has happened and we may see new all-time highs very soon. But this dragonfly doji candlestick that I am actually looking at right now is, putting me into a 50-50 kind of a situation wherein I may want to consider at least booking profits at these breakout points. Second important point to note is Bank Nifty is again not participating. We want the private banks to join the rally. We are not seeing any kind of participation from them if you leave out ICICI Bank and Axis Bank. So I think that's very important for the current momentum to sustain, because I really don't believe that if 40% of the index is not going to participate, I don't see this rally to sustain anymore. It's a pretty mixed bag kind of a situation currently. So all I'm expecting is that tomorrow we may see a highly volatile session for the Nifty and the Bank Nifty.
Okay, and we can see some bit of volatility actually kicking in, because Nifty is given up 20 to 25 points from the highs of the day just in last 10 or 15 minutes of trade. Bank Nifty too seems to have come off the highs of the day. 26,680 is where Bank Nifty is. That's the intraday chart suggesting there is some selling pressure which came in the last 5 to 10 minutes of trade. Hadrian, individual trading ideas for the day?
Yeah, very interesting to see JSW Steel that has been consolidating. If you compare it with the other steel stocks that have seen a little bit of profit booking, like a Tata Steel, JSW Steel is showing a lot of strength even right now, and I think one can consider going long in JSW Steel for a target of 355 and place stop loss at 339. The second stock that we are going short on is Adani Ports June futures. We are seeing a bearish engulfing pattern along with the stock failing to move past its 200-day moving average. That's not something that a bullish stock does. We see stocks breaking out from the 200-day moving average if it's going to sustain the momentum. I think that is lacking for Adani Ports. One can consider short selling Adani Ports June future for a target of 375 and place a stop loss at 387.
Okay, well, there you have it. One buy and one sell from Hadrian Mendonca. But Natasha, taking the pharmaceutical sector forward, in your opinion, how are you reading these underlying changes in fundamentals? And is it stock specific, or is it the entire sector as a whole that's likely to do well if you are suggesting it should do well?
So we think that one should be picking stocks very carefully within the sector right now. Overall, the sentiment for the sector has improved, especially since the US FDA gave a clean chit, or rather a few issues related to the regulatory filings have been resolved. So there has been an improvement in the sentiment,
right.
But the fundamentals have not really drastically improved across the board. Even now there is a lot of downward pressure with related to pricing, with related to margins, especially on the generic side as well as the US business side. So we would prefer to be very specific with which stocks to pick up, and within the pack, Aurobindo Pharma is our top pick.
Okay, and a word on Sun Pharmaceutical, do you cover it?
Yes, so I think purely in terms of the risk-reward ratio, it looks quite attractive. But however, one has to remember that it will take at least 6 months to a year before you start seeing any sizable improvement on the fundamental side of it. So for patient investors, they could definitely go ahead and accumulate the stocks right now. But definitely don't look at it from a perspective of a trading bet, because within 6 months you could not see as much of a gain.
Sure.
Okay, that's the sector which remains in focus. Remember, the Nifty Pharma Index has gone up for the 6th straight session in today's trade. But the top loser on Nifty remains Tata Steel. In fact, the stock's down for the 4th straight trading session today after the news came in that activist hedge fund Elliott Management has asked ThyssenKrupp to negotiate a better deal with the company with regard to their European operations. Natasha, if you guys are tracking Tata Steel, what sort of an impact do you see if actually there is renegotiation now which takes place for the for the joint venture to be formed for the European business?
I think it has been a largely a movement just because of a lot of news and a lot of speculation related to the stock. Till such time as there is an actual move that happens, we would prefer to stay away from it.
As of now, it's
yes.
So you guys don't have any coverage. Okay, it's neutral. The other stock I want to talk about is Britannia. That's touched its lifetime highs in today's trade, and valuations for the entire space remains a concern. We've been talking about HUL too, which touched its lifetime high levels yesterday. Within the FMCG pack, let's say if somebody is holding stocks like Britannia or HUL in their portfolio, do you think they should stay put, or it's time to do some bit of churning, move to other stocks where valuations appear to be a bit cheaper?
So I think both Britannia as well as HUL deserve the kind of valuations as well as the run-up that they've seen, given the fact that they have been able to maintain their brands, they have been able to grow the brands, especially the margin accretive brands over there. So for people who already have it in the portfolio, we would suggest that they should continue holding on to it. Okay. But for people who do not have it in the portfolio, this is not really the right time to get into it. It would be better to look at stocks like Marico and Daiwa, which have the potential to grow with the consumption story in the country and are not as expensive as these two.
Anything from the dairy pack that you guys track? I was just checking Parag Milk Foods that's gone up in
so I think we're positive on both Parag Milk Foods as well as Prabhat Dairy.
All right, Natasha, I wanted to quiz you about Page Industries. I don't know if you cover it, but we have seen a substantial surge. It continues to go from strength to strength. Valuations, it seems that investors are not really looking at valuations at this point in time. How would you approach the stock right now?
I would no longer buy it, but we've been positive on it even when it touched the 10,000 levels. I mean, this is a stock which doesn't deserve to be at that level.
Right.
It is the only distributor of jockey in the country, yes. And the license was always going to be a long-term one. There was never any threat as such that they would lose the license. The company has improved their production capabilities as well.
Right.
High margin, high ROE business. So we've always been positive on it, but we would not necessarily go out and buy it right now. We would prefer a correction before that happens, but we're happy with the run-up.
Okay, fair enough. Are the underlying technicals suggesting a near-term up move on Page Industries? Hadrian, can I take up Page Industries with you? How are you reading this one on the charts and levels to watch out for?
Yeah, absolutely. In fact, Page Industries after today's move is actually indicating on a fresh breakout. And if we see this close, if we see Page Industries closing around the same area that we're seeing right now on a weekly basis, that is by Friday's close, then I think the breakout that I'm talking about will hold true. Post that, I think Page Industries is all set to move higher by another 10 to 12% on a very conservative basis. I think if someone wants to play a swing or play the break, wait till Friday's close. I hope it closes above the 25,800 zone. Once we see that, one can consider even buying Page Industries for the 10-12% up move from here on. So technically, definitely, it's a positive move that we're seeing on a Page Industries.
We've seen some rub-off impacts, coming in for stocks like TT Limited. That's gone up in trade. You've also got something like Dollar Industries, Rupa and Company. All of them have seen substantial gains. I don't know if it's a rub-off impact of the news of Page Industries where they've extended their licensing agreement, but all of them have seen substantial gains. Right now, let's just move away and talk about Pidilite. I think that too has gone up in trade. I remember there was a near-term correction that was seen for this one in last week's trade, but for this week, it's bounced back, at least in today's trading session. Pidilite is up almost 2.5%. This is the other counter which has been outperforming, Natasha. How are you viewing it if you guys have coverage on this? What are the return potential that one can expect?
I think our target price on Pidilite, or rather our target returns on Pidilite, is another 17 or 18%, I could be wrong, from the current levels. The company is a market leader in the adhesive side, and the kind of distribution network as well as the brand recall that they have is something which provides them a huge safety moat and very strong ROEs, very strong return on capital employed as well. So it's a very good stock to have in the portfolio.
Natasha, I'm looking at the way banks have moved over the last 1 month. While the entire banking index has gained 1%, State Bank of India has advanced by as much as 15%. It's the next bank to do well was RBL Bank on the same index, and that's up as much as 8%. So there's a clear outperformance coming through for State Bank of India. We know that the public sector space is in a little bit of trouble, but how would you rate SBI, and is this move warranted?
Something that we've always maintained is that PSU banks are in trouble. They do not have the asset quality.
Right.
They have capitalization issues. They have legacy issues which have been continuing to plague them. So we would prefer to stay away from it. But even then, if someone really wants to have a PSU bank in their portfolio, then SBI would be it.
All right. I'm wondering if I can take Amar up on SBI as well, considering it's shown so much strength. Amar, is it likely to move higher from current levels in the near term? In that case, levels you would be watching out for?
Yeah, looking at SBI, what we're seeing on SBI is that the long-term trend for SBI still remains positive, because it has got extremely strong support coming in the range of 240, 250 odd levels, and from there only it's been bouncing back. But again, on the higher side towards 310, 320, that should act as a resistance level. So ideally what we are seeing in SBI is that, yes, the short-term momentum remains positive. The overall trend remains positive. But on the upside, it seems to be capped around 310, 320. So it's in a range. But yes, any pullback can be used as a buying opportunity. So it's more from a trading perspective rather than from a long-term perspective.
Okay, so that's from a trading perspective. Remember, yesterday also in the second half, there was a sharp recovery seen for banking stocks like State Bank of India and also ICICI Bank. Just want to pull up the index. We've come off quite sharply. Nifty is now sitting around the levels of 10,860. Bank Nifty is given up majority of its gains. That's sitting with gains of only 45 points. So at higher levels, definitely there is some selling pressure. And remember, we did highlight the futures of both these frontline indices had been trading at a discount, and maybe 10,900 still remains a strong resistance for this market, which we were trading pretty close to it, but failed to touch that mark in today's session. Natasha, what about the telecom pack? We've heard the news of Reliance Jio upping the ante once again. They're offering additional data to its users, countering the move of Bharti Airtel. We've seen a sharp correction for stocks like Idea and Bharti Airtel today. I don't know if it's right to play this space considering how over leveraged it is, but if somebody is holding stocks like Idea or Bharti Airtel for a while now, let's say last 2 to 3 years, what should be the ideal way to play it now?
I think if you see any kind of an upside on any one day, it is better to get out of these stocks, and both of them. And if they're very keen on playing the telecom space, it's better to play it through Reliance Industries rather than playing on either Bharti or on Idea.
Okay, so if you're sitting with the telecom shares in your portfolio, that too with shares of Idea and Bharti Airtel, then the advice coming in from Natasha is on any rise, just look to exit, because we've seen these stocks correcting quite sharply in last 1 year at least. Natasha, before I thank you, any pick that you have for our viewers from the broader markets or from the large cap space?
So I think the stock that we've recently been quite positive on is PI Industries. It is a good play on the agri side, and if monsoons are normal this year around too, this company would see a lot of up move. So both on the domestic side as well as on the CRAMS business, which is the export side, and a relatively higher margin. So they would see an expansion both on the margin side as well as on the volume side. We have an upside of about 20-22%, with the caveat that yes, the monsoons would be better than what everybody thinks it is.
All right, Natasha, thanks for joining us and giving us your views on the markets. We're watching out for PI Industries, of course, especially on the back of the monsoons this time around. But we'll move on, and it's almost a year since India adopted the goods and services tax regime. And while there may have been some nagging issues and temporary glitches, one does have to acknowledge the fact that it's a very big move towards a nation one tax regime, and aiding the entire process is a massive back-end system known as the GST network. Nikunj Johri caught up with Ajay Bhushan Pandey, the GST chairman, to find exactly how the system helps the taxman crack down errant flares.
GST and system, the way it has been rolled out and is unified, because the entire, all the returns get filed onto one system. So it also gets automatically cross-checked. For example, if somebody has sold goods to somebody, then in the buyer's returns, all these transactions should get reflected, right? And so this is the kind of the cross verification that goes on, right? And what we do is that by using several algorithms, right, we are trying to figure out that what is the where all the tax compliance issues are there, and there the appropriate. So what we do is that based on such analysis, that if we find any discrepancy, that somebody has sold the goods to someone, and then either the seller or purchaser has not disclosed that transaction, because any transaction involves two sides, seller and purchaser, and that transaction should get reflected in in the returns of both the dealers, right? So wherever there is a mismatch, we are in a position to find out, and then accordingly go back to the dealer and try and see that whether it was a inadvertent mistake, they could correct that. And if there are compliance issues, then the appropriate proceedings under the law, which is available under the GST law, that could be taken by the tax authorities. So the whole idea is that the GST system simplifies the tax filing process, and also it encourages the honest taxpayers, because if these honest taxpayers, they can file the return and then absolutely no manual interface, right? And at the same time, it also improves the compliance, because if people know that the entire system is such that it is very, very difficult for anyone to hide those transactions, then naturally the people will be tempted to report the correct things, and that is how the whole the compliance will improve.
And so also, has the government or GSTN been able to find out why is there still a significant gap in the number of taxpayers who are registered under GST and those who file their tax returns on a monthly basis? There seems to be still a significant gap in the two. So have you been able to find out the reason as to why this is happening? You see,
if you see historically the people take registrations under the various tax system. For example, when the VAT used to be there or service tax used to be there, that time people used to take a registration, right? Now when they take a registration, and supposing if there are no transactions, then the tendency is to not to file the returns, right? And if you compare the figures that in the earlier system, let's say in a particular state, how many people were registered under the VAT system and how many people were actually filing the return, and if you make a comparison, there is a definite improvement in terms of comparison with the earlier system. So there is an improvement, and then our endeavor will be that each dealer, even if he has to file a nil returns, right, he should be able to file nil return by pressing just 3 buttons that I mentioned to you a little while ago. So the whole idea is to make the whole process so simple that a dealer who is a very small dealer and he has to just report certain transactions. He should be able to file returns. We are also, in the new return design, what we are trying to do is that if the invoice itself, at the time of generation of the invoice, if it gets uploaded onto the GSTN portal, then the return automatically gets prepared. So one need not, go and collect the information from all the invoices and transport them onto the returns and then file. Because the returns are nothing but, the informations that are collected from the invoices, mostly, right? So the whole idea is that when the invoices are getting generated and getting uploaded, the relevant information can be taken out by the system to the returns, and then the returns should get auto-generated. And if there are some corrections, some adjustments are to be made, then the dealers can make them. So if we and our attempt is that if we simplify this process, and which we will do, then this will further encourage those who are not able to file returns for one reason or the other.
The GST Council had also approved a set of changes to the return filing framework. So have you initiated the work on that, and how long would those changes, how long will you take to incorporate all these changes in the current system?
The GST Council took a very landmark decision because earlier one had to file 3 returns: GSTR1, GSTR2, GSTR3, and then every month. So in 1 year, 36 returns. Right? We also added GSTR3B. So in together, there will be like 48 returns, right? Now, what we are trying to do is that all these returns will be replaced by 1 return in a month, right? And it will be a very, very simplified system. The GST Council has approved that. We already have started the work, right? And we expect that in the next few months, we should be able to, to roll out the new return system. Parallelly, during the transition phase, we will continue with GSTR3B and then the new return system, but and then at an appropriate time, the GSTR3B and GSTR1 will be withdrawn, and it will be only the new return will be continued.
So GSTR3B returns would continue for some time as well?
For some time, because we get revenue through GSTR3B, right? So whenever you try to bring in a new system, there has to be a transition plan. And this is the transition plan that we had presented to the GST Council. And this is the GST Council approved this.
All right, and you can catch this entire conversation this evening at 8:30 p.m. on Bloomberg Print Live. Well, on that note, we'll slip into a short break here in this edition of Countdown. Don't go anywhere. On the other side, we'll get you the Fab 4 stocks of the day at 3:15 p.m. We also tell you what the dealing rooms are recommending in trade and some closing strategies going from our technical experts as the markets have already given up the day's high level. Stay tuned. Welcome back. 29 or rather 30 minutes to go for markets to close, and we've given up the highs of today but still holding up in green. Nifty is still sitting with gains of almost 20 points. Bank Nifty up 47 points. Before I go across to the technical analyst, let's just pull up the European indices and check what they are doing currently and how they have reacted post the opening, if there is any sort of change that has come in for CAC, DAX or FTSE. So all three of them firmly in the green, but no major gains actually seen for FTSE, CAC or DAX right now. CAC sitting with maximum amount of gains with almost 0.2%. All right, on that note, let's get you the Fab 4 stocks of the day. And as usual, we've got Yash Kapadia right here with us to take us through that. Hi, Yash.
Hi, good afternoon, Navneet. So first up, we have KRChoksey International. That one's followed up on a big 5% move of yesterday after international brokerage firm Macquarie initiated coverage on the stock with a buy rating and a target price of 454 rupees, indicating a potential upside in excess of 22%. They expect the company's power transmission and distribution business to witness stable growth going forward and expect their revenues and net profit to grow at a compounded annual growth rate of 13 and 22% over FY18 to FY21. Page Industries is up as much as 4% today. The stock has been on a significant rally on a year-to-date basis, but the big move today comes after the company said that international brand Jockey has extended its licensing pact with the company until December 2040. A key development earlier in the day saw the Housing and Urban Affairs Ministry increase the carpet area by up to 33% for houses eligible for interest subsidy under the Pradhan Mantri Awas Yojana. Now that is a key positive for something like a HUDCO, and the stock is reacting positively. It's up about 6%. Finally, we're also looking at TCS. It's the top gainer on the Nifty. It had gained as much as 3% intraday after the company said that it would consider the proposal of a share buyback at its board meet on June 15. Back to you.
All right, thanks a lot, Yash, for bringing those Fab 4 stocks off today. Just want to highlight a few stocks. Pull up KPIT Technologies. That's fallen nearly 3% in trade as we speak. And well, Tata Steel continues to be the top loser when it comes to Nifty constituents, but also pull up stocks like Nalco. That's also seen some bit of correction coming by, 3% lower for Nalco, in fact, currently sitting at a day's low for this one. Hadrian, coming to you for Nalco on the charts, 3% lower. How is it looking?
Yeah, currently, in the previous week, if we see the Marico has already broken out from this consolidation phase, and it hit all-time high levels. But now, unfortunately, we are seeing intense profit booking around these levels, and I think if we see Marico closing below the 335 levels on a closing basis on a weekly basis, I think Marico will then register a false breakout, which is something that long holding investors wouldn't want to see. So 335 is something that's very important for a Marico to hold upon. If it manages to hold, then we'll see a resumption of the northbound journey that Marico has set on to. But below 335, I think things can change for a while, in the short term.
Adrian, actually, I was checking on Nalco too, that's National Aluminium, but both the stocks seems to be at day's low right now in the charts, both Marico as well as Nalco.
Yeah, National Aluminium is also going through a phase of profit booking, and rightly said, is trading near the day's low. Very importantly, it is once again broken below its long-term 200-day moving average. It's very important for stocks to maintain above this long-term average. A breach below this, changes the overall situation for any stock. So National Aluminium has once again done that. I think on the lower side, we could see National Aluminium slipping towards its previous low, which it hit in the previous month, close to 67 rupees. So that's something that I'm looking out for on a National Aluminium.
Okay, so over the last 1 month, we've also seen the Nifty advance by as much as 0.5%. But the top Nifty gainer in this last 1 month is Bajaj Finance. That's advanced by as much as 20% in the same period. And Bajaj Finserv, well, that's also advanced by as much as 13.5%. So substantial gains coming through for both these companies. Amar, if I can take you up on Bajaj Finance as well as Bajaj Finserv, what's going on here? And considering we've seen a little bit of dip in both these stocks today, is the trend, at least in the near term, intact? And is this a time when you can go in and, well, increase your positions? Or would you start being a little cautious considering the sharp up move seen in some of these stocks?
Talking about Bajaj Finance, what we are seeing is that the trend definitely remains positive. But again, on the short-term charts as well as the medium-term charts, we are seeing short-term charts in particular, we are seeing some bearish divergence. So that clearly reflects that the upside could now meet with selling pressure and also profit booking, because if we recall, Bajaj Finance had a very strong base around 2040, 50. That was acting as a very strong support. From there it bounced back. It's up by almost 10% from those levels in a very short span of almost 5-6 trading sessions. So clearly reflects that I wouldn't suggest anyone to buy, but yes, booking profits one can look at, and fresh positions I wouldn't suggest initiating at current levels.
And Bajaj Finserv?
And talking about Bajaj Finserv is also displaying similar sort of pattern, but if I compare both the stocks, then Bajaj Finance is stronger technically. Bajaj Finserv, what we are seeing is that somewhere on the upside, it's now getting capped around 6,100 odd levels or so. But the trend remains positive. But I would suggest that the risk-reward ratio really wouldn't work in one's favor for initiating fresh positions at these levels, because it has also been in some consolidation and it is meeting with very strong resistance, as I said, around 6,100 odd levels or so.
Okay, that's the view on Bajaj Finserv as well as Bajaj Finance. Markets have given up majority of the gains right now. So the lows, it's approaching the lows. The Nifty low today was 10,842.6. So you can watch out for that. Bank Nifty is just about holding up in green. The indices which have given up the gains, I think the Nifty Metals Index is now trading in the red. You've got the Media Index and also the FMCG Index. All of them have seen some bit of cuts coming by. Look at the Media Index, that's down substantially from the highs of the day. Looking at the constituents of a couple of these media stocks, you've got TV Today and Balaji. I think they are the top losers when it comes to the Nifty Media Index. But let's bring in our next expert on the show. Siddharth Sadani, Vice President of Equity Advisory at Anand Rathi, is joining us on the show. Siddharth, first a word on markets actually. We were doing pretty well throughout the session and approaching the 10,900 mark. Looks like there's a lot of resistance around that mark. But overall, what's the sentiment right now? Are you guys advising your clients to make any fresh purchases?
Of course, we are recommending the clients for fresh purchases, but being very selective. Having said that, most of the big events are out of the way. Only one of the events, which is FOMC, which will be reflected in our markets tomorrow with the news outflow by today night. This will impact the market with a short-term perspective, but broadly speaking, in the international market, of course, the news, the commodity prices would be one of the things which to watch out for. Apart from that, in the domestic market, I would say monsoon onset as well as the Q1 FY19 earnings would be the main triggers and direction providers for the market going forward. So one has to be very selective as of now. Index levels doesn't matter much because, of course, 10,900. But I think if you look at the stock prices, most of the stock prices are at the level of 10,500. So, of course, one has to be stock specific and one can start buying as on today also.
Okay, well, we do understand that Tata Steel is one of the top losers in today's day of trade right now. And Siddharth, before we can come to you on this one, considering there's a possibility of renegotiations with ThyssenKrupp, we have Nikki Mirchandani who's standing by with the updates. Nikki, good afternoon. What else do you have new when it comes to this particular deal on the anvil?
Sure, I'm going to start off with the timeline. Back when September 2017, the deal was first signed and the synergies worth around euro 400 to 600 million was seen at that point of time. But then if you look at the timeline, ever since the deal started in October 2017, Tata Steel Netherlands workers opposed the deal in December. ThyssenKrupp workers too had a problem, but then ThyssenKrupp negotiated a workforce offering job guarantees. Then in Jan 2018, we saw ThyssenKrupp workers expecting a planned collective wage agreement ahead of the deal. Feb 2018, ThyssenKrupp said that IPO would be possible and the lock-in period could be 6 years after the deal has been once sealed. In March 2018, German labor union threatened to reject JV. In April, the deal was deferred by 6 months. It said that the decision was expected by June end, but then got pushed to December 2018. In May, we saw Tata Steel Dutch employees asking for more time to assess the deal, and also at the same time, we had Elliott Capital Management, which said that it's going to be upping the stake in ThyssenKrupp. It held around 3% stake in that company. June 2018, again we saw Elliott Capital Management writing into ThyssenKrupp opposing the deal and talking about the weak fundamentals or the weak performance that Tata Steel had as compared to ThyssenKrupp. If you look at the impact analysis, given the kind of deal that we're seeing right now, at the EBITDA that we're seeing around 32,745, including the synergies and the FY18 numbers, you would see Tata Steel in the 50-50 venture around 73,392 crore. However, if one is supposed to go by the Elliott suggestion, where they've suggested a 80-20 kind of a deal, the share will then shrink from 73,000 to 29,357 crore.
Okay, thanks a lot, Nikki, for bringing all those details with regard to the timelines that Nikki just highlighted for us with regard to the European operation of Tata Steel. Siddharth, if I could come back to you on this one, the stock's been under pressure post the news came in that activist hedge fund Elliott, which picked up stake in ThyssenKrupp a few days back. In fact, I was also reading that they're looking to up their stake in the company, and if that actually happens, they've already asked the management of the company to renegotiate the deal. How are you reading this news? Because the stock's been reacting negatively since then.
Well, if the new deal comes in place and if a negotiation happens, what should be the new pricing which will happen, and what should be the new arrangement which should happen? And because of that, I think there is some kind of a nervousness in the stock. Although in the metals pack, we believe that I don't want to bet on to the base metal companies, steel companies. In fact, non-ferrous space likes of Nalco, Hindalco, these companies look a little more attractive than the steel space. Having said that, in the commodity space, along with that, we are positive on companies like Phillips Carbon, which are supplying carbon black, which is into specialty carbon, where the capacities has been increasing, and EBITDA per ton, the pricing has been also increasing with the realizations. So in the commodity space, Phillips Carbon Black looks very interesting. Along with that, in the metals pack, non-ferrous space likes of Hindalco and Nalco looks more interesting relatively rather than steel.
Okay, well, there's no dearth of IPOs coming through, but it seems like this time around United Breweries, along with several other beer makers, is going to have competition in the listed space. We have Bloomberg's Anto Antony joining us to give us an idea about who can possibly be the next one to be listed when it comes to the beer industry. Anto, over to you.
That's right. Carlsberg is looking at an India listing right now. So their India operations would be put into a vehicle and will be listed in the Indian market. Over the next couple of weeks, they will be meeting bankers in Singapore so that they can choose the arrangers for this deal. Right now, we don't know how the deal is going to be structured, but a couple of people have been telling us that maybe Carlsberg will put some of their operations, some of the overseas operations also into this vehicle.
Anto, any sort of indication or idea about the size of the issue?
Nothing is said so far, but as you know, Carlsberg is the third largest by market share in India in the beer market, and they sell 5 beers out here in this country under their own brand name and that of Tuborg. So looking at how the market is growing out here and how Carlsberg is set to benefit from that, we are expecting pretty aggressive valuations, but no fixed numbers so far.
Okay, we'll wait and watch out if there are any more details emerging out of that. Thanks a lot, Anto, for bringing those exclusive details where Carlsberg could be mulling listing in India. Siddharth, the liquor pack has been in focus this year. We've seen stocks like United Spirits, United Breweries. Radico Khaitan has seen a bit of selling pressure in the recent past as the stock came under the additional surveillance measure of the stock exchange. But overall, do you think this theme will continue to do well in the remainder of the year?
Well, this theme happens to be an evergreen theme, all-season theme. Overall perspective, of course, if we talk about operationally, of course, these companies has been improving operationally, especially United Spirits, and DIGO being the management is really planning hard and a strong outlook provided in terms of their commentary for another 2 to 3 years. So, of course, this theme should continue. The entire space has been buzzing. I think United Spirits out of the pack, being the leader with a 50% market share, looks better off. Along with that, of course, you rightly pointed out Radico Khaitan. Those, if you talk about the numbers, the company had posted good set of numbers. But because of its inclusion in ASM list by exchanges and SEBI, I think the stock has been battered badly. So, of course, Radico, United Spirits, these would be the two main plays in the entire liquor space.
All right, we watch out for some of these liquor stocks, but it's that time of the show when we bring you what the dealing rooms are recommending. We have Yatin Mota and Darshan Mehta here to give us an idea about what's going on in the dealing rooms. Yatin, I'm going to toss it over to you.
Thanks for that, Agam. Of course, we have been choppy in today's trade, but despite that, dealers have a couple of buy recommendations, especially on Kaveri seeds. This is one stock wherein dealers are, of the view that domestic funds are buying the stock, and probably the positive momentum that has been built today would be lasting for 1 or 2 days. Almost 6% up for that one. 22 lakh shares are traded already on the counter. Apart from that, do watch out for Cipla. And we have been talking about this for a couple of days, that pharma has been bouncing back. Dealers expecting some further uptrend in pharmaceutical stocks, so dealer recommend a BTST, which is a buy today sell tomorrow kind of a strategy on Cipla. And a final stock, United Breweries. We had a Bloomberg exclusive which said that Carlsberg is looking at an IPO. Probably, a lot of HNIs have been buying in anticipation, and in general also United Breweries has been talking about, volumes moving higher. So dealers in general are positive on liquor stock, especially the likes of United Breweries. But Darshan has a few more stocks to talk about.
Yeah, so one of the stocks that's been spoken about is REC. It's up almost 1% in trade. The general buzz that we're getting is that there could be a potential corporate announcement that could come in on decent volume. 4 million shares have already been traded. So REC is one of the counters that's been spoken about. The ADAG pack is something that is seeing a little bit of momentum. Reliance Capital, for one, is something that dealers believe that the momentum will return on the counter. So they are actively watching out for Reliance Capital. And finally, two stocks in which some of the FII funds have taken position. ACC, which was near fresh 52-week low, is seeing a little bit of bounce back in trade today, and Bajaj Auto is the second one in which some of the FIIs are accumulating at this point of time. So we'll watch out for these counters.
All right, thanks a lot, Darshan as well as Yatin, for bringing that dealing room check with us. Pull up Delta Corp, that stock's up 7% in trade. It's been actually holding up to its gains for the majority of the trading period in today's session. Pull up Delta Corp, it's trading around the mark of 244 as we speak, up 7% in trade. Amar, a technical check on this one on the charts at 244. Do you see the stock moving higher from the current levels?
Looking at Delta Corp, what we are seeing is that the stock has been on a continuous slide from almost 400 odd levels to currently around 244, 45. But it seems to have formed a base somewhere in the region of 225, 230. That's a strong support for the stock. And technically looking at the charts, the long-term trend, the long-term trend remains positive for the stock. So that's the reason we are seeing some pullback. And 210, 220, that's a very strong support zone. So it's very likely that the stock is going to find this support, and this should act as a short-term bottom. So any pullback can be used as a buying opportunity. But what one needs to remember is that the short-term as well as the medium-term trend that still remains down. So higher side towards 260, 270 levels, that should be used as a profit booking, because the stock is now going to get into consolidation zone.
Okay, well, from the telecom space, as we were addressing earlier, things seem to be getting worse and worse for Idea Cellular specifically in this case. And today, too, we're looking at a decline of another near 6%. Substantial weakness coming in through for Idea Cellular, and currently trading at around 61.6. Hadrian, how are you reading on the underlying technicals in Idea Cellular, and would you initiate fresh short positions at this point in time?
Yes, absolutely. I would go ahead and initiate a short position on Idea, especially the overall trend continues to remain in this lower top, lower bottom structure. The rally that we saw in the past, 3 to 4 weeks has, once again showed signs that it's going to turn around. And I think we are actually at the tip of the whole, iceberg. So I think keeping yesterday's top as a stop loss, one can, definitely go ahead and initiate short positions in an Idea. And I think we are heading back towards its, short-term low, previous low of 55, in the next coming week or so.
Okay, so that's a sell coming in on Idea on the charts, which is down almost 6% in trade, but it's 3:20 that time of the show when we get you some closing strategies from our technical experts. Amar, I'm going to come to you first. Any BTST or any STBT for tomorrow's trade?
Yeah, there's one particular stock I would like to recommend, and that is Britannia. What we are seeing in this stock is that the stock is extremely strong across different time frames, be it the short term, the medium term, or the long term. And since the start of the year, the stock is up almost 28%. So any pullback can be used as a buying opportunity towards 6,000 odd levels, that can be a good level to buy with a stop loss of 5,854 and a target of 6,200 on the upside. Because technically the structure of this stock remains positive. Yes, it has witnessed a sharp rally, but the trend still remains extremely strong, so any pullback can be used as a buying opportunity for the stock.
Okay, and Hadrian, any counters in your mind that could be employed towards the long or the short, keeping in mind tomorrow?
Yeah, so Reliance would be on the long side, and L&T Finance June futures would be on the short side. One can go long on the Reliance given the strong structure that Reliance is showing. In fact, it's on the verge of a fresh breakout. I think in the short term we could see levels of 1030, 1040 as well on the Reliance Industries. So one can go long on Reliance and can go short on L&T Finance for a target of 160 in coming days.
Okay, so those are a couple of closing strategies from our technical experts. But Siddharth, what about the fundamental pick of the day? Anything that's looking interesting to you?
What we are banking on is rural theme. We believe that companies like Hemen Financial can be bought at the current levels with a target of 609. Now, basically, if we talk about this company, this is one of the largest company in the tractor financing space, which is a mainstay of rural business. Company size is quite big in nature, to a 30,000 crore market cap. The main focus market area is rural plus semi-urban. If we talk about the other part of the business, that is SME, home loan business is also expected to grow around 18 to 20% on a CAGR basis. We believe this company has big plans to foray into other businesses like two-wheeler financing, consumer durables. So these new era businesses financing which company is planning to get into. Along with that, three main triggers which seems for the company as of now is normal monsoon, higher farm income, and third is government spending. All the three will play a big catalyst for the company in coming 6 to 12 months. We believe 2.7 times price to book FY19 earnings. This company looks quite attractive at the current price with a target of 609.
Okay, Siddharth, it's interesting you spoke about the NBFC space. What we are also witnessing is that while there has been a lot of strength for the likes of Bajaj Finance, Bajaj Finserv, there are a bunch of other NBFCs such as something like Capital First, or for that matter in the public sector space, PNB Housing Finance, Canfin Homes. Well, they still have a substantial upside based on Bloomberg consensus projections. Do you like any of the other NBFCs which may have a substantial upside from current market levels other than Hemen Financial?
Yes, of course, rightly spoken that Bajaj Finance, Bajaj Finserv, these are all evergreen businesses which has been growing on as a compounder. Apart from this, today's news for the housing finance space as affordable housing, I think this space is also buzzing. The kind of change in the initial plans which government has done from 200 square meter carpet. So this has all been also a welcome move by the government, and the positive impacted companies would be Indiabull Housing Finance. Of course, the other housing finance would be also getting the pie of it, but we still believe in the NBFC space, apart from Hemen, Indiabull Housing Finance looks very interesting. If we talk about the last two quarters growth, 20% growth was last quarter, 50% profit growth last quarter. So the company has been really performing well. Disbursements has been about 30%. Indiabull Housing Finance in the HFC space, housing finance space, looks very interesting.
Okay, so that's a top pick in the affordable housing space. That's Indiabull's Housing Finance. But on that note, Siddharth, thank you so much for joining us today and taking us through your views and thoughts on markets. Well, just a few minutes to go for markets to close, and we're obviously off the day's high, but there are a few stocks actually which have been locked in upper circuit. Pull up Jubilant Industries. I think for the longest time, for majority of the session today, it was up almost 20% in trade as the chart indicates. So AdLabs too actually has been locked in upper circuit with gains of 20%. So good going for that one. But the other one which we did highlight on the show was Muthoot Capital, which is up almost 10%. It was up 14 to 15% also at one point of time. But the markets, especially the broader markets, they're trading in the negative territory right now. Hadrian, on the charts, any thoughts on Muthoot Capital?
Yeah, Muthoot Capital has given a very strong move, and this move has actually aided the stock to first of all hit fresh lifetime highs and also break out from a consolidation base. So I think when we see a breakout from consolidation base at the top, I think it adds even more confidence in the momentum that the stock is building onto. I think Muthoot Capital can further move higher and also surpass the 1100 or may also make an attempt to hit the 1150 levels. If you have a couple of weeks time as a trading position. So Muthoot Finance, definitely the momentum is likely to be carrying forward.
3 months, the stock's given good return. It's up over 30%, which means it's outperformed the broader markets as well. But just 3 minutes to go for markets to close. Let's head across to Agam to find out how exactly today's closing is panning out. And Agam, not so great. We were looking at the 10,900 mark, but we're closing off the day's high level.
You're right, Navneet. Not encouraging when the way we've seen some of these benchmark indices pan out. Eventually, they're likely to close out marginally in the green. As far as the Nifty and the Sensex go, just about a 0.1% up move, at least as of now. And the Nifty at one point in time was in kissing distance of the 10,900 marks. Well, that hasn't come to be, and it's actually come off quite substantially from around that level. Even the Nifty Bank too, again, we haven't seen too much traction in today's day of trade when it comes to banks. A lot of this has been led by the pharmaceutical space and to a certain extent the IT space, so not too much to speak for. But what does it mean for the broader markets? How have they panned out? Well, clearly underperformed the benchmark indices. As you can see, the mid-cap index down as much as 0.3%. It's the same for the small-cap index as well, which is down by as much as 0.25%. And the BSE mid-cap index, as a matter of fact, seeing a cut of as much as 0.5%. That said, let's also take a look at how some of these movers have turned out when it comes to the indices. In terms of gainers, of course, we've had the likes of Dr. Reddy's and Cipla, from the pharmaceutical space, and TCS is one key reason behind the gain in the Nifty IT index. We also have gains in Lupin as well as Titan, and well, SPI continues its up move. As I had mentioned earlier, it continues to show a lot of strength in comparison to not only the public sector banks but also the private sector banks over the last 1 month. On the losing end, as you can see, we have some weakness coming in Larsen & Toubro as well as HBCL, the relatively heavier weighted companies, and the reason behind this decline will be HUL and something like an ITC. Of course, some weakness coming in HBCL and Vedanta as well. So we'll be watching out for some of these stocks, but on the whole, if you leave out the pharma space as well as the IT space, well, not such a great day when it comes to the benchmark indices.
That's right, Agam, and at least for the broader markets, we're closing the day in the red. There was some selling pressure seen for a lot of the stocks, but I'm going to start off with some gainers. Jubilant Industries and AdLabs were two stocks which were locked in upper circuit in today's trade with gains of nearly 20%. So AdLabs closing around the level of 44. Let's see what happens tomorrow in these two stocks. PC Jewelers was very active even on the futures and option side. The stock was up 7.5%. There was a lot of build-up that was seen on the future side, suggesting fresh long positions being taken for this one. The other F&O gainer for the day was also Kaveri Seeds. That had a great session on the open interest front. Once again, there was some 16-17% higher build-up. So 564 is where Kaveri Seed is closing, and Muthoot Capital also was up and about. It didn't close at day's high, came off a bit, but still closing with good gains of 9%. One pack which did well on back of Page Industries news, that's the innerwear space. You had Page Industries touching lifetime high levels after it extended its licensing agreement with a jockey, and that's the reason why the stock was up. But the other stocks like Rupa and TT Limited, there was some rub-off effect seen in the sector. On the losing side, Idea was down. That saw very sharp cuts in today's trade. It is closing around the mark of 60-61. You also had stocks like ICICI Prudential, that was down. KPIT Tech, that saw some profit booking coming by in today's session. That fell in the second half of the session, as you can see, closing at day's low. And also stocks like Nalco, that saw some bit of selling pressure, and something like Uptown, that too came under some bit of selling pressure. Uptown closing around the day's low mark with cuts of nearly 6%.
Okay, so let's bring in the intraday chart for the index, and as we were mentioning, the day started with a lot of promise. Eventually, at some point in time towards the latter half of the session, it did move, closing in towards the 10,900 mark, and since then it has fallen back to, well, not at day's lows, but near day's lows. We're marginally in the green. Let's take a look at the heat map as well when it comes to the Nifty 50. And again, not too much to speak for. Fairly evenly placed between the advance and declines on at least the benchmark, with the likes of Dr. Reddy's, Cipla and Lupin from the pharma space, and TCS and Infi from the IT space leading the gains essentially. And on the losing end, we have Tata Steel, Adani Ports and Z Entertainment showing declines. So not too much to speak for when it comes to the index. But Navneet, have we seen a big change in the advance decline ratio over the last 1 hour?
Let's see, let's just pull up the market breadth, because definitely the broader markets ended in the red. And as you can see, just in the last half an hour of trade, the picture reversed, and it is in favor of the declines towards the closing. I just want to pull up the contributors list. I think had it not been for something like TCS and Infi, which are the heavyweights, we would have ended the day also in red. Yeah, so almost 18 points came from there. TCS, Infosys, and some support coming from ICICI Bank. This was the stock which went up in yesterday's trade as well. Let's just pull up the turnover and see how the participation shaped up. Almost 7 lakhs for NSE F&O, which is slightly, not slightly, but above the average turnover which we see, and little bit of uptick seen for NSE cash. Yesterday we recorded somewhere between 27 and today it's almost 29,000 crores. So participation increased a bit in today's session. We've recorded total turnover of nearly 7.2 lakh crore. On that note, let's get some closing thoughts going from our technical experts. Hadrian, going to come to you. We're going to get some important news tonight from US. FOMC meet concludes, and we'll get to know whether there's a rate hike or not. Keeping all those crucial events in mind, how would you approach the index tomorrow?
Yeah, as I mentioned earlier in our conversation, that if 40% of the index is not going to participate, and if Bank Nifty is not going to participate, I don't think the breakout that I spoke about from a symmetrical triangle pattern on the Nifty could sustain. And I think exactly that is what is playing out. In fact, there is a threat now on a Nifty of a double top, potential double top, around the 10,930, and today's high is 10,890 odd levels. So I think as far as tomorrow's trade is concerned, I think I would actually advise to go short on a Bank Nifty June futures, and keep a stop loss at 26,750 on the upside, and go and remain short. On the downside, I'm expecting 26,520 odd levels on a Bank Nifty.
Okay, so short on the Bank Nifty from Hadrian. But Amar, how are you reading cues, considering the Nifty has now closed well away from the mark of 10,900, precisely 10,856 now?
I would say that overall, looking at the charts, technically the short-term trend as well as the medium-term trend remains positive. But yes, the FOMC meet and the outcome is awaited. So I see that's one of the reasons why we are seeing some profit booking also coming. And also technically 10,900, which I spoke about, 10,900, 930, 950 band, that's going to act as a very strong resistance. So this was something which was likely to happen. But yes, any pullback towards, because now Nifty has got very strong support around 10,740, 750. That's a very strong support zone for Nifty. So we'll have to watch out how the market opens tomorrow, and then only decide on the trade.
Well, we'll be taking cues with what happens in the US markets today. On that note, I would like to thank both our technical experts for the day, Amar as well as Hadrian. Thanks a ton for joining us and taking us through your technical views on the markets and individual stocks. Well, on that note, we'll wrap it up here on this edition of Countdown. Thanks a lot for watching the show. It's goodbye from Agam and my side, but don't go anywhere. Coming up next, we wrap the day's trading action for you. Stay tuned.